What if I told you the difference between blowing up your account and becoming a consistently profitable trader comes down to just one rule? Paul Tudor Jones, a billionaire trader who predicted the 1987 stock market crash and built one of the most successful hedge funds in history, lives by this rule every single day. And here's the kicker, you probably ignore it in your own trading. Before I give you the details of what made this great stock trader, make sure to like, comment and subscribe to this YouTube channel so you do not miss important videos like this. Now, for those who may not know, Paul Tudor Jones is the founder of Tudor Investment Corporation. He's one of the most respected hedge fund managers alive today. His claim to fame? In 1987, while the world panicked during the biggest one-day crash in Wall Street history, Paul Tudor Jones made hundreds of millions of dollars by betting against the market. But here's the thing, it wasn't luck. His edge was discipline. Paul Tudor Jones has one golden rule that he swears by: don't focus on making money, focus on protecting what you have. He's famous for risking only 1 to 2% of his capital per trade, ever. Think about that. A billionaire who could risk far more than you and I, yet he limits himself to just 1 to 2% risk. Why? Because survival is the real game in trading. Now, let's be real. Most traders do the exact opposite. They risk 10, 20, sometimes 50% of their account on a single trade, chasing a quick win. And when the market goes against them? Boom, account blown. Paul Tudor Jones teaches us that the key is not to hit home runs every day. The key is to preserve your capital so you're still standing when the real opportunities come. Let's go back to 1987. While others were celebrating the bull market, Jones studied the data and became convinced the market was heading for disaster. He positioned himself accordingly. When Black Monday hit, the Dow dropped more than 20% in a single day. Traders were devastated, billions were lost. But Paul Tudor Jones walked away with a massive profit, because he had the discipline to stick to his convictions and the risk management to survive even if he was wrong. So here's what that means for you as a forex trader: the next time you place a trade, don't ask yourself, how much can I make? Ask yourself, how much am I willing to lose? That one question could save your account. Because the truth is, the greatest traders aren't the ones who win every trade, they're the ones who survive long enough to stay in the game. Paul Tudor Jones built his fortune not by chasing profits, but by respecting risk. And if you want to grow as a trader, start thinking the same way. Protect your capital first, and the profits will come. If you found this lesson helpful, make sure to hit that subscribe button and join me here at Trade with Lumide. This is where we study the psychology, mindset, and life lessons of the greatest traders who ever lived, so you can improve your trading game from the inside out. Remember, master the mindset, and you'll master the markets. I'll see you in the next video.